Hey guys, what's going on? It's your favorite mortgage lender, Abdel Khawatmi, Got Mortgages, Paramount Residential Mortgage Group. I want to give us a quick little rundown in regards to where we're at in the market, the meeting that just occurred on Friday with the Jackson Hole meetings with Jerome Powell, some of the things, really a little bit of a background of where the market has been over the last couple of weeks and what's to be accepted into the near future. So the first thing is, if some of us are not aware, the Federal Reserve actually has 8 pre-scheduled meetings throughout the year. At the conclusion of each of those meetings, what the Federal Reserve does is they release an official statement, which includes a lot of those potential changes in the Fed funds rate. Now, the Fed funds rate is a lot different than mortgage rates, but there is a lot of things, guys, that the Federal Reserve actually does to adjust its rate hike pace. And what that does is it often impacts rates directly, like mortgages and what's called the 10-year Treasury yields. Now, with all of us talking about that, there was actually no official policy statement directly from the Fed last week, and we really didn't see any massive change to the Fed funds rate. So, in short, what that means is that the federal funds rate, it's actually slowly, it's considering to increase quickly enough that what's going to happen is they're going to start to consider eventually slowing down the pace of those rate hikes. So the results of the previous months of July, actually, the numbers came out, and it was one of the best months in reference to a downward movement in mortgage rates for the last decade, which is great. We're slowly on a little trajectory of the movement of where it's been. And the market has actually been pushing back against that exuberance ever since, where the rates have slowly ticked up. Now, what's also happening is we're receiving slightly friendlier inflation data. That word inflation is going to get thrown around really for the next couple months, maybe even years. So the slightly friendlier inflation data would need to continue in this same aspect, the same vein for the next couple months, so we can build what's called a disinflationary case, which basically means that inflation is a key reason why rates have been so high over the last few months. And also a handful of weak economic reports that we've seen definitely does not help. It doesn't mean that anything conclusive has occurred. But what we want to see is we want to see a joint of that reduction in inflation and then simultaneously a lot of economic reports. Now, Jerome Powell did basically say on Friday, bluntly, he reiterated and said that we already know there wasn't much things for the bond market of what they can do. Now, that's actually not a bad thing. So it's a good thing in terms of avoiding additional rate hikes, but it also means that there's really no case that can be made, a compelling case, to see that rates are going to drop that much quickly, okay? So at the end of the day, what we're going to see is the rate market's probably right where it's at. It's not at the highest it's been in 2022, but we're also not taking too much of a lead back to the lower levels. And in order to really prove that we need that drop in rates, we need to see a lot more friendlier inflation data. And really, we're starting to see a little bit of a negative impact on that, and that could potentially shape where the rates actually occur. We're going to see a lot of very, very important economic reports that are coming out this week. I think that should directly impact the rate momentums from the June FHFA reports. It's usually about 2 months late. And then most importantly, we're going to see the economic job reports that's going to come out actually on Friday, where we're going to actually expect a reduction from $528,000 in new jobs in July to actually just $285,000 in August. Obviously, there's been a lot of massive layoffs from different companies, a lot of real estate companies, a lot of different mortgage companies, and so on and so forth. I think that may potentially play an impact. We'll keep an eye on that. Any questions that you guys have, again, Abdel Khawatmi, Paramount Residential Mortgage Group with my Got Mortgages team. Give me a call directly, 201-679-0422, and I definitely look forward to providing you guys with some more educational data as they slowly come in. Thanks, guys, and I'll catch you guys next time.